mouse isn't. How do I get this? Not pointing anything on the screen. How do I activate this? This doesn't work, but I can use this as time. Just do. Oh, it's already. How do I don't need to share it continuously. I need to share it. Oh, so I'll tag. You'll share it when I say share it. All right, perfect. Thank you. Alex, on the screen? The video. Oh, because you're running it. Cool. All right. I'm thrilled to have my friend Alex Wilson join us today. Alex, journey like mine. We started as consultants. We saw that it's better to be an owner, operator, entrepreneur, and have real responsibility. And Alex built and sold a company to Shift4, and he's an entrepreneur, serial entrepreneur, going on another journey today. So we're going to talk about payments as a category. Payments notably are rallying today in a sea of red. So I want to highlight that for folks too. Second, we'll talk about specific opportunities in that category, differences in public markets and private markets. And we'll talk about the entrepreneurial journey that Alex has gone through, and even get into health and longevity. Alex is very deep in health and longevity. I'm deep in health and longevity. The NAD, I got the infrared sauna. I listened to Dr. Rhonda Patrick. I got all of our clients, including Alex, Dr. Peter Attia's book before I know he was in the Epstein files. So, Alex, welcome. Good to see you again.
Yeah, Ram, good to see you too, and thanks for having me on today.
Always a pleasure. Always learn talking to you. Why don't you start by just introducing yourself to the audience?
Yeah, sure. So live in Miami. Love it here. Definitely a Miami maximalist. Started, like you said, in the consulting days before I decided, time to start a company. Went to college at Wake Forest, where I actually met my co-founder, Pat Duffy, who you also know. And we started the Giving Block back in 2018, ran that for a couple of years, sold it to Shift4, like you said. And just yesterday, we launched Cyclops. So that's a bit of an overview, but I'm sure we'll get into more details on each of those.
Yes, we will. We'll get into your next entrepreneurial adventure in a moment. Entrepreneurs really have to have a high tolerance for pain, because you're basically waking up and asking to get punched in the face and the stomach each day. Elon says it well. It is like eating glass, and you need to have a certain mindset to be a founder and entrepreneur. And I think you've got that mindset. So I want to get into that too. First off, let's just start with the overall payments category. So the payments sector has been a bear market for several years now. It was obviously a very hot theme in 2021, and it's gone down quite a bit. Notably, the CEO of PayPal was fired a few weeks ago. That seems to have marked the bottom in the stock, and a number of other names in the category. You're seeing private market valuations that are extended. Stripe did an up round, 130 billion valuation, up from something like 86 from several years ago. But in public markets, you're seeing a lot of declines. Help us make sense of what you see playing out in markets.
Yeah, I think you've done a good job of covering a lot of this, where a lot of it just has to do with what's hot, right? This hot ball of money, the attention economy, really. And AI has sort of sucked the air out of the room for a lot of other sectors. I think payments was pretty cool and pretty hot for a long time, last couple of years. And NVIDIA and CoreWeave and these other companies have drawn in a lot of money that may have gone towards payments companies otherwise. So I just don't think there's a lot of attention on payments companies right now. And they're maybe not as new and exciting as some of the other opportunities out there, but I think that'll come back around, and maybe it's already started now.
Right. Paul, do you mind sharing the screen? I got PayPal on the screen here. So, it's the classic non-consensus rally. Everyone hates payments. Everyone throwing the towel with the bathwater and the baby out with the bathwater, and starts to rally. There's also, the business that acquired your startup, Shift4. Tell us more about Shift4, the business model it has, and we'll start to kind of break out different segments in the payments category, like merchant
Yeah.
acquiring, for example. Good, yeah.
Yeah. So Shift4, I think it's a really, you know, underappreciated business. And when we sold the Giving Block, actually, we weren't actually planning on even selling the company at the time, but we were starting to get a lot of inbound, a lot of interest. We hired bankers to run a process, and personally, I'd never heard of Shift4 back then. That was about 4 years ago when we closed the deal with Shift4. But once you hear the name Shift4, once you know to look for it, it's actually everywhere. They're huge, especially if you think about the U.S. market. 30% of restaurants in the country, 40% of hotels, something like 70 or 80% of stadiums and event venues, and then of course all sorts of online and e-commerce businesses. But it's everywhere. And the founder in particular, Jared Isaacman, has a really cool story. He's even gone to space, and maybe we can get into that more later. But he was a really awesome guy to work for.
Perfect. No, I think a lot of it has to do with how companies are introduced into public markets. If you go through a venture route and you've got some logos there and there's a roadshow process and it looks like Silicon Valley, you get a different reception.
Yeah.
Go ahead.
I think that plays a role in this too, right? The way the company looks, the way the company feels is definitely not a Silicon Valley company, right? I
Yeah.
mean, the company was started in Allentown, Pennsylvania. I don't think Jared took any outside money until the IPO, actually. He really built it organically, very disciplined, kind of more old school, you could say. Not all hypey, not, announcing announcements and things like that.
Yeah, exactly. And I'm sharing on the screen here Shift4's free cash flow yield. So this is one of the stocks in our 2026 Lumida stock picks. Timing payments is the key thing here. The thing about these annual stock picks is not everything's set up on January 1st. You've got to stock and wait for the good entry. But if I look at it now, it's got a 12.79, free cash flow yield, and it's got a very clean balance sheet. How does a company like this differentiate and compete with a company like Stripe? Here's another thing, by the way: 7.8 price to free cash flow ratio
Yeah.
and a price to sales ratio less than 1. Go ahead.
Yeah. I mean, the company is making a lot of money, right? Unlike a lot of hot companies that people think are cool and pay a lot of attention to, Shift4 actually makes money, right? And a lot of it. So they've definitely got that going for them. In terms of how Shift4 differentiates, I mean, it's changed a little bit over time. When they started, the pitch was basically consolidate everything to one payments companies, right? You get the payments, the gateway, the hardware, everything sort of all in one. And they were focused on things like restaurants and hotels and things like that. One differentiator back then was even integrations and things like that. And the company's been around for about 25 years now. So what differentiated them has changed over the years. And because they've grown so much, they've gotten into other verticals, they've gotten into other geographies. It's a very global company now compared to where it was 5 years ago when they IPO'd. And I think what differentiates them is a little bit different in each market, right? So in some markets, it might be the hardware. In some markets, it might be the integrations. In some markets, like higher risk categories, it might be the approval rates and the optimizations that can be done. So it's a bit more
Slack.
nuanced overall.
How would Adyen and other players in the category that also have a lot of attention from investors?
Yeah. I think Adyen is a really well-run company, and they're of course doing really well. I think one interesting dynamic is Shift4 started as a point-of-sale company and then got into e-commerce, whereas Adyen and a lot of the other companies like Stripe are doing the reverse. And I think point of sale is something that's a bit hard for them to break into. I mean, they're certainly making some progress there. But if you go to, let's say, Europe, and you compare the European and the US market for, let's just say, restaurants, because it's an easy example. When you go to restaurants here, it's very digital, it's very integrated, it's fairly automated, it's a pretty competitive market. You go to Europe on vacation, and they're still bringing you the terminal to your table, right? And then they're manually, reconciling that with a terminal somewhere else. It's a mess. I mean, it's very old school. A lot of it's done by the banks over there still compared to the US. So Shift4 has been investing a lot in other markets because the opportunity and the competitor set is so much different there, and there's a lot of growth to be had there.
Eating everyone's lunch, or is that a myth? There's a
Sorry, I lost
perception
your
out there.
audio for a second.
Is Stripe eating everyone's lunch, right? This thing went from an $86 billion valuation to a $130 billion valuation. And, obviously that's in private markets. That's not in
Yeah.
mark-to-market land where the rest of us live. How much of that is perception versus reality?
I think it's a mix. I definitely don't think they're eating everyone's lunch. I mean, when I was at Shift4, we won deals against Stripe all the time, right? It's not like they're just completely dominating everything. It's a good company, no doubt, right? But they have their strengths and they have their weaknesses, and each company does as well. But there was plenty of times we were winning deals against Stripe.
I agree with that. Look, I think it's the only payments company that's seen its valuation go up, and it's because it's subject to private non-mark-to-market. You saw
Yeah.
that Brex transaction. They were valued at something like 10 to 12 billion in 2021. They were bought by Capital One for $5 billion. Hey, look, that's still a win, depending on where you invested last, et cetera.
Yeah.
But I think Stripe got an up round because it's still private. What are your thoughts on that?
I think that's the only reason, right? They have
Right.
way more say flexibility in the valuation when it's private.
Flexibility is a nice word for it.
But right, just based on the numbers, it doesn't make any sense, the disconnect, right, between Stripe's valuation and public payments companies. I mean, even if you compare them to Adyen, right, which on some metrics they're blowing Stripe away, right? So I think it's a pretty big gap that doesn't make sense, but I think public markets will catch up to that. Maybe not all the way, but they're certainly going to make up some ground here, I think.
That makes sense. How do you think this will play out for the bank core processors, like the Fiservs of the world and the FISs and the Jack Henrys? Now, these are legacy dinosaur technology companies, have been around for decades. They're the backbone for many banks. They do provide mission critical software. At the same time, the TAM is shrinking. The number of banks outstanding is decreasing as there's more M&A and larger banks take up more consumer share. Those stocks have been absolutely destroyed also. Now, they all have a role to play in payments. They provide banks with merchant acquiring capabilities, for example. FIS and some of these other bank cores are providing a stablecoin technology to bridge themselves into the future. Do you have a view on that sector or any names there?
Not specific view on names, but I think, I think payments companies are going to do better than people expect over the coming years. I think people are way overestimating how disrupted they expect payments companies to be by AI or stablecoins or whatever the buzzword of the day is. I mean, the payments companies certainly need to keep up with those technologies, but I think there's a lot more staying power with these payments companies than I think people give them credit for. And even for things like stablecoins, I mean, right now, distribution still plays a huge role in the adoption. And I think there's a lot of talk on Wall Street and analysts that they seem overly worried about, stable coins are going to, completely disintermediate Visa or a payment processor. Whereas I really think it's more complementary than it is completely disruptive or a replacement rail.
Right. Is there enough differentiation in the category? I mean, when I look at it, it just seems like intense competition. There are dozens of players in public markets. There are dozens of players in private markets. There are specialized players going after different verticals and segments. And generally, I like to avoid competition. At the same time, the valuations have come down quite a bit. So how do you make sense of competition and the ability for these firms to have sustained value capture?
Yeah. So I think, like you said, there's going to continue to be sort of vertical specific market leaders for a while. I do think we keep seeing more and more consolidation, though. Like even if you look at Shift4, right, they've done a ton of M&A. I don't expect Shift4 and other payments companies to stop doing M&A, right? Stripe's doing plenty of M&A. So I do think there is more consolidation among the bigger payments companies, but I still think even with that, you're going to see kind of standout dominant players in verticals like restaurants and hotels and stadiums where Shift4 is incredibly dominant.
Makes sense. Any other thoughts on the payments category overall?
Um, Overall,
Especially
you know,
the angles around crypto, let's say,
yeah,
because
I mean,
crypto's in a
on
bear market too, right? Go ahead, yeah.
crypto and stable coins, I mean, I think it's interesting. There's a lot of sort of innovation theater at some of these companies, right? They put out an
Oh yeah.
announcement, they
Oh
say they're
yeah.
doing something,
Yep.
they might do a pilot, some small scale thing, but you know, out of all the companies out there, Stripe is probably doing the best job when it comes to crypto and stablecoins, right? I don't think anyone could really disagree with that. And everyone else seems like they're trying to play catch up. Shift4 has done a better job than most. I might be a little biased in that statement since I played a big role in that. But I generally think it's incredibly complementary to these payments businesses, especially on the B2B side for things like settlements. So I really think it will actually increase margins for payments companies and make a lot of their customer relationships even stickier.
So stable coins aren't a race to zero. I mean, one would think that it would disintermediate interchange. That should be a next step. Now, that's consistent with your statement too. You can have new players that get in, offer services, they can grow their business, but they can take the profit pools away from the legacy card issuers like the JP
Yeah,
Morgans, United Mileage Pluses of the world, and Chase and et cetera.
yeah. But also think about the different ways and places payments companies are moving money, right? So I don't think interchange goes away, but even let's just say in a scenario where it did, think about even merchant settlement, merchant payouts with stablecoins too, which would have nothing to do with the interchange necessarily. But it's allowing merchants to get their money more quickly, more 24/7 on holidays and weekends. And in a lot of cases, the payments companies can optimize their own treasury based on that as well.
Is there an area within payments that you think is most protected or secure from the threat of competition from new upstarts, innovation, or maybe a category that's focused on a customer segment that's just difficult to access by a firm like a Stripe?
Yeah, I mean, there's certainly a little bit of a regulatory moat, right? The compliance apparatuses they've built. I think a lot of the physical businesses, like point of sale, is very protectable compared to some of the e-commerce stuff, which you can switch out a bit easier. Um, and then I think, yeah, there's industry specific stuff where you need hundreds of integrations in some cases, like restaurants and hotels. That's even more defensible. Um, so yeah, there's certainly I think you don't see a lot of like brand new payments companies coming out of nowhere either, right? Because I think those barriers to entry are generally pretty high, unless maybe you're being crypto native from day one and you're only doing crypto. But if you
Mhm.
still want to service fiat and sort of the more traditional rails, there are quite a few barriers to entry. And I think at this point, it's pretty hard to disrupt the bigger guys.
Fair enough. Fair enough. No, right. The bricks and mortars angle is a very real one. Stripe grew through online payments processing. It's harder to get after opportunities in the real world. How will players in the merchant acquiring space, those are the players that help businesses, small businesses, brick and mortar, hotels, et cetera, accept payments? So how will stablecoin technology be introduced to that world? Will it be these intermediaries today that just adopt the technology?
Yeah, I think a lot of crypto companies, right? Even BitPay, who's been around forever, has been trying to get crypto payments adopted for what seems like ever, right?
Right,
And I
right.
think the missing pieces, well, one was people didn't want to spend their Bitcoin in the early days, right? Or it was more of a novelty. And the second piece, and maybe the most important piece, was they lacked the distribution, right? If you're going to go merchant by merchant trying to convince each restaurant to sign up one at a time, like have fun with that. I'm not doing that, right? That's impossible. So the payments companies that are building these crypto solutions in an integrated way that's just offered as another payment method are the ones who are going to, really see that uptick. But I'm not super excited on the actual spending your crypto use case. I mean, a little bit more so now with stable coins. I don't see that as a huge use case for everyday transactions right now. I see it, being more popular in the luxury and sort of high-end segments, right? Like
Right.
you can book a private jet, you can maybe go to a jewelry store, designer store, things like that, high-end hotels. That's where we're seeing adoption on crypto and stablecoin payments. You can even buy an apartment in Miami if you want with crypto
Right.
now.
Right.
But I think the real adoption is coming, and from what we've seen, is really on the stablecoin settlement side for merchants. So it doesn't
Hmm.
matter how they took the payment, but they
Hmm.
say, hey, I want 24/7 settlement or 7 day a week settlement. And the only way to really do that is using stablecoin rails.
Makes sense. And Raincard has grown very quickly by providing a digital wallet where people can fund purchases
Yeah.
using their digital currency as a form of value. That's
Yeah.
been interesting to see play out.
And I
Good.
gotta say that caught me a little bit off guard how popular that became. These stablecoin backed cards,
Hmm.
right? Because it's you see it in the Visa earnings call and investor letters, right? Huge volumes. Like I was really impressed how quickly Rain these other companies took off. Um, but it's great, right? It's a good sign for the industry.
No, that's right. It's we'll see how it plays out because a lot of crypto's moved into kind of public markets and public equities now and rotated. So we'll have to see the usage around that. But a lot of people have attempted to do that, and in some ways they deliver on the original promise of Satoshi Nakamoto electronic peer-to-peer cash. It's just happening via a stablecoin format now because the processing costs and the timing around Bitcoin just hasn't lent itself for payments. But there are emerging market use cases where you've got a sovereign who isn't reliable in terms of how they manage their currency.
Yeah. And it's really at this point kind of hard to compare the two even, right? Bitcoin and stable coins. I mean, everyone groups it together as crypto. But for what we're doing in payments, like stable coins are essentially all that matter for the
Mhm.
most part.
Yep. Is there any moat, would you say, around players like Circle and Tether's getting the category? They're launching a U.S. backed stablecoin, the U.S. AT, J.P. Morgan. All these other players are
Yeah.
putting their horse in the race. Like, how does this shake out?
Yeah, it's something I have a really hard time figuring out. I mean, I think there is a decent moat for Circle and Tether. A lot of it's distribution, some of it's liquidity, some of it's regulatory, right? But I do think if anyone's going to compete with them or beat them, it almost has to be someone like a big bank or a consortium of banks. I think the banks will be their own worst enemy when it comes to that, right? And
Mhm.
especially if it's a consortium and everything's decided by committee and things like that, they'll just be so slow. But if anyone's going to do it, I do think it is someone like a bank or a large payments company, someone who has the licensing, things like that.
I think that makes a lot of sense, right? Zelle was put together as a consortium by banks. It achieved rapid adoption, first starting with the big banks, and then the smaller banks got on board. So there's a model out there, but the smaller banks wouldn't want to be a part of the same group as the big banks because they learned, they got smarter, they know the big banks want to eat their lunch, and they might be handing their customers over to the large banks by having one single interoperability layer.
Yeah,
So, there's an opportunity for startups there. I know there are firms like Stablecore and Omnia, they're startups trying to provide solutions for more of the regional and small banks. It'll be interesting to see how it plays out. And then you have like the Fiservs of the world that are also trying to make the smaller banks relevant.
yeah, yeah. It's going to be really interesting. I mean, I think a lot of people probably, if you asked them 2 years ago, would have thought maybe there was going to be a lot more sort of large market cap stablecoins besides Circle and Tether, because a lot fundraised huge amounts and most of them fizzled out, right? No one's
Right.
really in a very serious way challenging the size of Circle and Tether right now that I know of.
Makes sense. When can we start to see a reduction in interchange costs that the merchants pay? Ultimately, consumers pay for it, right? We go into the local deli, we swipe a card, there's a 2 to 3% transaction fee that deli is paying to a network of back-end providers, Visa, MasterCard, the merchant acquirer, the card issuer. When do we start to see real cost reductions in payments?
Um, on the merchant side, I think it's not, the savings won't necessarily come from a savings in interchange. Like I don't think MasterCard or Visa give in on reducing their interchange that quickly, right? They have pretty good monopolies that they can probably
Mhm.
protect for a while. I think the savings for the consumers or the merchants probably come from other rails rather than credit cards. I really just don't see the credit card margins for stuff like interchange changing very much anytime soon.
Well, that's the primary driver of cost in the system. So, that's unfortunate. I agree with you, by the way, because people don't want to give up on their rewards points, and consumers are part of the problem, right?
Yeah,
They're attached to these loyalty programs.
yeah.
Uh,
And
But
if anything,
yeah,
they're getting more attached, right? Robinhood just launched a new premium card to compete with Amex Platinum. Like people
yeah,
love these premium
yeah,
cards. They get the lounge access, everything else, right?
100%. The only response is if merchants offer their own discounts at point of sale, and we call these coupons, right? We call these promotional offers
Yeah.
because they can discount and deliver more value than rewards points can, right? The margin for a retailer, the gross margin is like 50%. There's a
Yeah.
lot more room versus what a rewards point
Yeah.
can deliver, and those rewards points get diluted over time also.
Yeah. And what's interesting too is like when we do talk to merchants about accepting crypto or stablecoin payments at the point of sale, it is cheaper for them to take crypto than credit cards. And for someone like a Shift4 or a Stripe, often their margins actually end up being as good or even better, which I think is also something that's pretty misunderstood by the market, right? Because they're removing the interchange for everyone involved, and they're able to capture a larger spread because of that, even if the rack rate price is, let's say, 2% instead of 3%.
Makes sense. Let's shift gears and talk more about Cyclops. So this is your next entrepreneurial adventure. I like the Cyclops name. I love Greek mythology. Cyclops was a formidable character uh, in the Odyssey. So tell us more about Cyclops.
Yeah. So Cyclops was something we came up with based on our experience working at Shift4. So 4 years ago, almost exactly, we sold the giving block to Shift4. And when we joined Shift4, one of the mandates was, build out this crypto team, build crypto products, basically get Shift4 off zero for crypto. We were the first business they acquired that had any crypto capabilities. Um, so we pieced together, all the different vendors in the industry to build stuff like payment acceptance and stablecoin acceptance, like we talked about, to build out stablecoin settlement and stablecoin payouts for merchants. And we were actually pretty surprised by how difficult it was and how sort of immature some of these solutions were and difficult to use they were. And we had a dedicated engineering and product team and plenty of resources at a big company, but it took us a while and it was pretty difficult. And essentially we got fed up with it and said, we think we can do this better. The crypto and stablecoin infrastructure companies aren't servicing payments companies the right way. And none of them, surprisingly, are focused on payments companies. So the whole concept around Cyclops is one, we can do it better. And two, we're the only crypto and stablecoin infrastructure company that exclusively works with payments. Everyone else is going much, much broader.
That makes sense. And what's the unique value proposition for Cyclops? Like, how would you describe the target customer? How do you approach that customer?
Yeah.
Go ahead.
Target customer is payments companies like Shift4. So Shift4 is both an investor and a customer. F Prime and Castle Island also invested alongside Shift4. So we're only working with, let's call it PSPs, acquirers, gateways, payment orchestrators. We'll literally say no to anyone else. So we're not going to work with anyone, and that's essentially the point. So everything we do, from how we contract to how we onboard to how we integrate and how we bring these products to market, is made for a payments company. Right? If you show up at one of these other infrastructure providers, it's like, hey, here's a generic contract, here's a generic dashboard, here's a generic set of API docs. Go build your own solution. You better have a team of engineers who are going to customize all this. Cyclops is going to have a lot more of that right out of the box, and in a lot of cases, even no code solutions. So we'll be the fastest way to get these payments companies off zero. And part of the pitch too is, Stripe is doing a great job with a lot of these crypto and stablecoin solutions. We'll help you guys keep up with Stripe without having to spend $1 billion on acquiring a company like Bridge.
Right. So you're the picks and shovels infrastructure play to help payments companies become relevant to stablecoins. You're
Yeah,
taking you're taking the success you had at Shift4 the last 4 years, and the insights and learning you had there, and enabling the category to level up and close the gap. Because innovation is hard in a highly regulated industry, and it makes sense for one player to lead that transformation.
yeah. And I think, most payments companies don't want to become a crypto company or a stablecoin company. right? They don't want to go get the crypto specific licensing. They don't want to build out a team of dedicated engineers and product people. It makes more sense for them to partner in most cases because, like you said, these big companies, it's hard to innovate, it's hard to launch new products, especially when it requires completely different people or business models. The other thing that I think is interesting is the further we get into this, the more we realize this is actually a lot like our last business. Um, so, some of the people watching might be a little bit familiar with the Giving Block, but we help charities accept and fundraise crypto and stablecoin donations as early as 2018. And the playbook was very similar. Pick an industry, focus on that, make all of your solutions tailored to that industry. Everything from the onboarding to the reporting to the reconciliation to the integrations to their websites and their products. And just stay as narrow as possible in that. And that's essentially what we're doing again now, but with the payments industry.
I like it a lot. I mean, there's a lot of entrepreneurial lessons there. Know who your customer is, know what the customer profile is, know how to target them, how to deliver service to them, how to meet their needs, and then focus, focus, focus. Focus is excellence. And now you're doing it again. I mean, some of the most successful companies in the world are just focused. They're highly focused on who their customer is, and they deliver a value proposition. They're not trying to be all things to all people. And you're also focused on niches that other people might otherwise ignore because they're FOMOing into opportunities that everyone's looking at the same time.
Yeah, like if you look at these other crypto and stablecoin infrastructure companies, they'll list maybe payments companies or PSPs, but it'll be one of 10 categories they service, right?
Right, right, because they want the big TAM number on the PowerPoint slide for the venture investor. But the expression is the niche will make you rich. This is the non-consensus approach to entrepreneurship.
Yeah,
Focus on the customer,
we love it.
deliver value, differentiate, and
Yeah.
grow with that.
We were kind of proud of it that we're kind of taking, let's say, a more boring approach, right?
Boring is good.
Yeah, we love boring. Boring makes
Yeah,
money,
boring is great. I
right?
agree. Look at Brad
So
Jacobs, what he did, right?
yeah,
QXO,
exactly.
waste management, XPO, logistics. Boring is good. Billionaire multiple times over.
Yeah, exactly. So we're happy to be called the boring version of that. Maybe it doesn't get some of the VCs as excited, but that's fine. There's plenty out there that do understand it.
Fair enough. Makes sense. And you're also doing this again with your co-founder, which is fantastic. So it's a dynamic duo, getting back after it again. It's incredibly important to have a strong founding team and leadership.
Yeah.
How's that journey been like? That's more intense than most marriages, probably, both in
Yeah.
duration and number of phone calls and emotion.
Yeah. And we actually have a third co-founder this time too, David Johnson. So the
Oh,
quick backstory though on the team and the overall founders is Pat and I actually went to college together. We went to Wake Forest together. We both ended up in DC, first jobs out of college, stayed in the same social circles, things like that. He was actually working at a nonprofit when I was a consultant. So we always said he was kind of the nonprofit guy. I was the crypto guy when we started the Giving Block. But similar to Cyclops, right? We really lived the experience and the problems that these customers were facing. But it's been a lot of fun. And I mean, you've met Pat. I think what works well with a lot of founders is actually being very different. So
yes.
we are incredibly different people, but that's often why we think it works so well.
100%. You have to have a shared vision, shared mission, but different core competencies and skills, and work
Yeah,
together, as a highly effective team.
exactly.
Um,
There's a pretty cool
yeah.
story too, actually, with the third co-founder now, David Johnson for Cyclops. When we started the Giving Block, he was running a blockchain and crypto co-working space in Washington, D.C., while he was a full-time lawyer at Pillsbury. We were the
Oh,
first
wow.
startup to work out of that office space,
Oh,
which was really cool. So he helped us out a lot, and he knew basically the Giving Block from day one, and then of course became our outside lawyer for the Giving Block, helped with the M&A and ultimately selling to Shift Four. And soon after we sold to Shift Four, we convinced him to come in house and join us at Shift Four. And now he's the third co-founder and filling a huge gap that we had, which was someone who
yeah.
could really handle the legal and compliance side of things for us.
It makes so much sense. Hiring a lawyer on the management team early can make significant impact, and it's highly underrated. lawyers don't often make great CEOs. I think the exception to the rule is Renaud Laplanche, who founded Lending Club and took that public and then has built Upgrade. But that's the exception to the rule. But lawyers make for excellent members of founding teams because, to your point, they're thinking about all the other angles, and they're highly thorough, they're execution oriented, they're dotting I's, crossing T's,
Yeah.
deliverable oriented.
David's probably more entrepreneurial than most. So it's nice to have that angle as well. But between the three of us, we really cover all the bases well.
Amazing, amazing. Any other founder insights or kind of lessons you've done this a few times now, so you've
Yeah.
learned from successes and failures. What are some of the nuggets that you want to share with founders or entrepreneurs?
Yeah, I mean, you have to just really enjoy working with those co-founders, right? You've got to be able to have fun no matter what the ups and downs are like. So, I think people maybe underestimate how much time you're going to spend with them, right? And how well you have to get along. Fortunate for us, we don't have many major disagreements or anything like that because of how well we get along, and we're constantly like talking each other out of and into things, right? You have to be very willing to change your mind based on your co-founder's feedback, and we do that all day, every day, right? So it's a good sort of gut check on your own opinions, your own ideas, your own assumptions. And that's part of also why I think it's so important to have co-founders who are different than you, right? It gives you a totally unique
100%.
perspective on everything. But the three of us, we really do have a ton of fun. We're in Miami this week all together, working together. It's always so much fun in the office, going out to dinner afterwards. Like, we really enjoy working together. And you can, at a certain point, even laugh about things when they go poorly, right? I think that's really important. Like, at a certain point, something so ridiculous happens that you can just kind of laugh together about it.
Well, I think having a sense of humor is an important way to manage stress. That's one
Yeah.
of the common themes. I think it's true in public markets also. You have to have a sense of humor. It's like a coping mechanism.
Yeah, I completely agree. And I think just whether you're an entrepreneur or just a successful professional, like, that's a theme across all of that. Or it's like, don't let the little things like ruin your whole day,
Mhm,
right? I think
mhm.
that's a huge thing.
100%.
Like,
Yeah,
people will let someone
yeah,
cutting them off in traffic ruin the next hour of their day or something, right? Like, that's
right.
a horrible way to live your life. And if you live your life like that in business too,
Yeah,
you're not gonna, I don't think, do very well or get very far.
I 100% agree. What's your approach to talent? I would say identifying, attracting, hiring talent is one of the most important things for entrepreneurial success.
Yeah. Hiring is hard for sure. We made plenty of mistakes in the early days where we're always getting better, but it never really gets, I would say, easy. It gets easier, but never easy. And I really think that's a core role the founders have to play, though, right? Is attracting and, just as importantly, retaining talent. We spend a lot of time thinking through, what do we want this company culture to be like? What are the principles, right? Like, what do we want people to believe in? What do we want people to have as sort of their North Star? Making sure we get time together to really think through those and make sure people are aligned. And this idea of like kind of like a cultural fit interview, I think, is one of the most important parts of the interview, right? Because I don't care how smart someone is, but if I can't work with them, I'm not going to get very far with them.
How do you test
So
for what are your go-to questions there?
I don't even know that I have good go-to questions. It's, you know,
It's a
you
vibe
just,
thing.
it's a little bit of a vibe, but you have like
Okay.
places you try to take the conversation and just see how they respond to different things, and
Yeah,
kind of get a
yeah.
sense for how people answer questions, solve problems, deal with like random hiccups, right? It's like a mindset and approach you try to get a feel for, that I think tells you a lot about how someone's going to work with you.
100% agree. I think looking for people that are curious, have a learning mindset, problem-solving mindset, and also can take feedback well. I'll try to find an opportunity to give people feedback in an interview and just see how they can handle it. They have a fragile ego, or do they take the
Yeah,
feedback? Do they push back the feedback? That could be fine
yeah.
too, and just testing for that resilience.
It's funny. Curiosity is one of our principles for what we look for in people we hire.
Mhm.
And it's so important. And especially if you're building in a company like crypto and stablecoins or payments, like everyone on the team has to be genuinely curious about those industries and what's happening in them, right? There's so much
Yes.
happening. And if you're not paying attention, like we have a whole channel dedicated in Slack, right? Sharing stuff all day. And the news is incredible how quickly this stuff is happening. And you really have to understand it to do well and navigate the space well. So someone is really going to lag in their performance if they're not taking all this sort of external input into account for what we're building, how we're positioning the company, what's working, what's not working, all of these things. So it's
Yep.
a huge thing we look for.
Yep. Makes a lot of sense. Let's take a step back and talk more about your journey. So you started as a consultant, then became an entrepreneur. Walk us through that transition.
Yeah. So I always wanted to be an entrepreneur is maybe where I'll start. I was always trying to make money essentially, right? That's
Mhm.
what a lot of it came down to. Especially like in high school and college, I was working odd jobs. Had a couple different businesses in high school already, landscaping business even with a couple
Mhm.
friends, buying and selling domain names in high school already. Made enough money to buy my first couple of cars doing that. Even helping, basically older people sell things on eBay and Craigslist and things like that in high school. I had a good business around that. But for me, like the making money part was always a core driver of that. And part of that was because I just wanted to have a bit of flexibility, a little bit of freedom. My parents were pretty middle class, but no, certainly not rich by any means. And so a huge motivator actually was trying to help my family, trying to help myself create a better life, all these different things. And consulting, right, was pretty appealing out of college as a good place to learn a lot, make a pretty good salary for a 22-year-old, still be able to do some things on the side. Started getting into crypto at that first consulting job, really more of a nights and weekends interest. But again, right, thought the technology was interesting, thought it would be a trend that wasn't going away, thought it would be a good way to level up my career. And that's how a lot of this started.
Yeah, no, I think consulting is an incredible training ground, and it's also another, top 5 role that I think startup founders should look for when they're hiring and building a team, because they can create structure and translate the vision to a work plan and ensure we're moving at pace. So I mean, it's an ideal background. I grew up in consulting also, and very quickly said, look, I got to get into the real world and learn how to actually build a business. So a lot of that resonates with me. How about your philosophical journey? I remember you and I were having dinner in Miami a couple months ago, and you mentioned that while you were at Wake Forest, you had kind of one philosophical viewpoint. You read a book, and it transformed your thinking.
Yeah.
I think it's yeah.
Yeah, no, it's definitely changed a lot over the years. I would say, interestingly, maybe in let's say call it high school, college. So I would say like left leaning generally, like even like Bernie Sanders, people like that. Um, and by college, I was in the business school at Wake Forest, and probably the most impactful class I ever took at Wake was the study of capitalism. It was a really incredible class that changed my life forever, where they took us through all these different economic theories, philosophies, right? We read the Communist Manifesto, but we also read stuff like The Road to Serfdom or Atlas Shrugged. Had a really awesome teacher for that, Dr. Paige West, who did a great job playing both sides of it and really making us discuss it and think a lot about it. And at Wake Forest, actually, at the time, they gave every business school student a copy of Atlas Shrugged, which was funded by actually BB&T and their former CEO John Allison. And it's actually something I've stayed involved with at Wake Forest. I'm now an advisor to the Center of Capitalism there at Wake Forest because I really want to keep that program going. And it's one of the few schools in the country who still has a program like that. And I think this kind of, let's say, more libertarian mindset and thinking has played a large role in building these businesses too.
There's a center of capitalism. I had no idea. We must protect this institution at all costs.
Yeah.
Uh, I think there's a lot to be said for that. I mean, you're a living example of someone who's achieved significant success due to the climate and opportunities that are created by capitalism. You've created jobs, you've created value for shareholders, your team. and it's extraordinary. And no, I agree. I think we need more capitalism, in the world today. It does seem like more and more industries are just becoming very highly regulated. Like it's just an extension of a government. The banking sector is highly regulated in so many ways, and some of these regulations are appropriate, but some of them go too far. Healthcare is highly regulated, energy is highly regulated. Um,
Yeah.
what are your thoughts or reactions there?
I mean, yeah, that's where things seem to be trending, right? More regulated rather than less. I mean, maybe that's swinging back a little bit again with this administration, but overall, yeah, it doesn't look great. I don't think for the future of capitalism, but hopefully, people will continue to see the
Hmm.
good in it. I mean, it's done more good than any other system in the world, right, by far.
Right.
And I think
Like.
there's just generally too much talk about negative things in life, not just talking
Hmm.
about, economic systems, but all we do is talk about negatives if you open the news, right?
Hmm.
So we just as a society need to focus more on the positives and the good things happening in the world because it's so easy to think, doom and gloom all day, every day. And
Yeah.
then you see the guy down the street driving a Ferrari and blame your problems on him, right?
Right. No, I agree. Like, I think what capitalism introduces is also accountability and ownership, and it forces attention to issues that need to be addressed, and you can
Yeah,
identify who's responsible for addressing that.
yeah,
And a lot of it's like a fear of pain. There's a fear of pain. We used to have bank failures a couple decades ago. Now we don't. At the sight of any kind of risk, there's some kind of bailout, and a taxpayer is
yeah,
paying for that. And that also means you get limitations on innovation, and that has a real social cost,
yeah.
to the point of, say, merchants that are paying an extraordinary amount in transaction fees.
Yeah. Well, I think we've sort of broken the incentive system in some industries in the feedback loop, right? Like you're saying, like you stop learning when you stop failing, essentially. And the
Yes.
businesses, the executives at them, and I think even for people's like professional careers, like all of these things, right? And I also think it's much less fulfilling for someone, right? If they're not getting feedback, they're not getting the right incentives. I mean, you and I know this for hiring, how important incentives are in feedback, but like that needs to be applied to a societal level, really, right? And I think it
Yes.
plays a huge role in productivity, happiness, fulfillment, all of these things.
I agree. I mean, it comes down to how does a decision made and who bears the benefits and burdens of these decisions. And if you usually align those things, you have a better shot at getting to better outcomes through a process of discovery and experimentation. And if you look at alternatives, you usually get into committees and who's more persuasive, or who's louder, and that's not always the rational outcome.
Yeah.
So no, I agree. Let's shift gears and talk about longevity. So you've gone deep in this longevity space. I do NAD infusions every couple of months. I take my vitamin D and K3. I take my krill oil. I focus on sleep. I'm conscious of blue light. I might take magnesium as a relaxant from time to time. I avoid alcohol and cannabis. Uh, that's my regime in a nutshell. I try to cultivate feelings of curiosity, wonder, and gratitude as well, exercise, etc. So I think that's my base case. But you've gone above and beyond this in many ways. You've done um, pressure chambers, for example. Do you want to talk about that? And we'll go through some of your other,
Yeah.
areas.
Yeah, and it's funny because it's changed a lot over the years. Like when I first started getting into health, maybe I don't know, 8, 10 years ago, it was more of this like paleo primal movement, right? Just
Mhm.
eating more naturally, moving more, like very simple stuff. And then you started to have more, let's say, health influencers and all this other stuff coming out. Started watching stuff more like, I don't know, Andrew Huberman's podcast, for example, learning more and
Mhm.
more. But it's like this curiosity we talked about earlier, right? Like we've never had more information available to us about what's healthy and what you should and shouldn't do. And there's less and less of an excuse for not being healthy, essentially, in my opinion. And I've really taken it further and further as I've gone down this rabbit hole. And I love having people like Brian Johnson show you what the extreme can look like and be sort of a model for what you can maybe strive to. I mean, I don't think it's realistic that everyone lives their life like Brian Johnson anytime soon. But it is interesting to follow along and try as much of those, as much from those protocols as possible. So I've done everything from, I got stem cells injected in my back, had to fly to the Bahamas for that because you can't get them in the US. Really helped with my herniated disc. That was an interesting process. And
So it helped. So you had an issue with your herniated disc, and you said, okay, the treatment we want to explore is an injection of stem cells.
yeah, so I hurt
And
my
it worked.
back like 15 years ago, herniated a disc weightlifting.
Yeah.
And as I got older, it just got worse and worse, right? I did all the physical therapy, I did all the usual things they tell you to do. And the last, thing left would have been surgery. And I said, I'm only 32. I don't really want to get surgery. And just did a lot of research. And there was even a Joe Rogan episode about people who've gotten stem cells. You hear these crazy stories. And actually, Brian Johnson also got stem cells in his other joints, not his back. I ended up going to the same place Brian Johnson went in the Bahamas to get that. But yeah, you can't get that treatment in the US. And what's really interesting is you can't get stem cell treatments in many places, in part because in the US, for example, you can only get your own stem cells. And the other barrier is that you can't pay to be in a clinical trial where they give you stem cells. So the stem cells I got were from University of Stockholm in Sweden, sent to the Bahamas, where you're allowed to pay to be in a clinical trial, and administered to me there.
Yeah. They're offering it in Dubai also.
Yeah.
So medical tourism is on the rise. It's a big trend. Elective health is a major trend also. This is all part of that. People want to spend their money on quality of life and living longer. I think it's a great investable trend. Finding the right opportunities though isn't that easy though. For example, NAD, there's no brand for this. Like, how do you play it? It's easy to enter the category.
Yeah. I mean, here in Miami, you see a bunch of these like wellness and longevity places popping up. Like I go to one right here in Brickell where I do the hyperbaric chamber, and then I do red light right after.
Walk us through those two. So you do the
Yeah.
hyperbaric chamber. How do you do that while maintaining productivity? Because you got to get stuff done as a founder.
Yeah. So I do 1 to 2 sessions a week of 90 minutes, and you're in this pressurized tube with an oxygen mask on. And I actually bring my laptop in there and work. So you can't really take meetings because people can't hear you very well in there, but I'll occasionally try to do that anyway. But I can work while I'm in there, so I can stay productive.
That makes sense. And what do you experience afterwards? Are there noticeable effects?
Yeah, the biggest thing I notice is, I mean, I try to work out most days, and my recovery is just so much better on those days where I do the hyperbaric chamber. So you just feel like you're healing and bouncing back so much quicker. And I really notice a difference with that.
So you'll do it the day that you have an intense workout?
I usually just end up doing it on the weekends because that's when I have more time to do it.
Sure.
Ends up being probably a Saturday and a Sunday session while I get some work done. But you just feel ready for Monday again once you've gone through those, and you really feel ready to hit the gym hard again.
Great for recovery. And what's the benefit? Is it driving better VO2 max?
Not really. I mean, there's certainly sort of a anti-inflammatory piece to both the oxygen and the pressure. That's the biggest piece. Right? Like you'll see if you have like a really bad concussion even, or some sort of brain damage, they'll put you in hyperbaric chamber quite a while. That's how they heal you from some really bad accidents and injuries. So there's some healing properties to it.
Got it. Interesting. And what was the next technique you mentioned?
Yeah, so right after that, I'll do 10 minutes of full body red light. So there's these big panels, one on the front, one on the back. You just stand still for basically 10 minutes in there. And similar, also supposed to help with inflammation, circulation, all these kind of feel-good effects as well. And they recommend you actually do that after the hyperbaric chamber. I forget exactly why. Maybe something to do with your cells being more oxygenated then. I forget the exact logic, but that's what they always tell me when I'm there.
Got it. And what's the purported benefit from this also? And is it backed up by any clinical data, or is it just a subjective sense of well-being?
No, there's pretty good clinical data around both of them. Hyperbaric chamber in particular.
Yes.
If you ask Brian Johnson, it's one of the best things he has in his entire protocol, like bang for your buck.
Yeah, Novak Djokovic first popularized this. He rose the ranks by getting the hyperbaric chamber and reducing gluten consumption.
Oh, interesting. I didn't know that about him. I knew about the gluten part. I heard that, but not the hyperbaric part.
Yeah, he was one of the earlier adopters. It's
Yeah.
interesting. So I have a red light therapy too, but I try to integrate with my infrared sauna, but it's clunky because they're two separate devices. So I got to stand it up outside the sauna, and you got to kind of mount it somewhere. But
Yeah.
whoever integrates those two devices together, I think that's an interesting product opportunity.
Yeah, sauna is another good one. Sauna, steam room, any sort of heated environment like that. Definitely good to get that a couple times a week at least.
Yep. Any other techniques that you experiment with? So Brian's done a bunch of psychedelics, and he put an invitation out for people that want to go through his program. He said it was capped at a small number of individuals, and I think he was quoting like $1 million for people to enroll.
I saw that.
And he had 1,000 people sign up.
Yeah.
Well over 1,000, right?
Yeah. No, I haven't experimented with any psychedelic treatments or anything like that, but he's really big on that now. He's written a lot about it. He's pretty convinced it's going to be big, or
yeah, he had the live stream a few months ago of his experience, and they're measuring the post-treatment effect on different longevity markers, and he's saying that there's been an improvement in those markers, and it's only been a few months.
Yeah, super interesting.
It is. I want to learn more about that. Yeah, go ahead. Mm-hmm.
I think for all of this stuff too, right? Like nothing beats getting the basics right, though, right? Like sleeping enough, eating right, exercising. Like everyone looks for the easy button, though, right?
Yes.
They start taking supplements before they are even sleeping enough or exercising, and I'm guilty of that sometimes too, right? Trying to find the easy button, and sometimes I might get ahead of myself trying something new, and really I should be focusing on getting my sleep better or something like that.
Yeah. No, I agree. I managed to convince my doctor that I'm eligible for a sleep apnea treatment. So I have this ResMed device that just improves the quality of breathing when I sleep. The first time I took the test, the doctor, they give you something you put on your finger and there's some measurement. And I had the best sleep of my life that very night, as it turns out. So I go to the doctor. I know the results are going to say I don't qualify at all. I said, doctor, you don't understand. I just had some amazing sleep. I know the results aren't going to say that, but you just got to get me this sleep apnea device because it can enhance quality of sleep. Sometimes you might wake up and you just feel a little bit groggy. You don't feel well rested. But I've noticed that, that's another addition in my routine that I think helps.
You know what I noticed too regarding sleep is as I got healthier and back into shape and doing all these things, my snoring has gotten way better. As my wife tells me, at least.
Yeah.
That I think people underestimate lifestyle as a big factor in snoring.
Yeah. Lifestyle is a big one. Lifestyles, and diet and BMI and weight loss. Have you ever explored fasting protocols?
Yeah, but more intermediate fasting rather than true long-term fasting.
Right.
I'm not doing any fasting very consistently right now.
Gotcha.
Yeah, but I do think there is something there and believe in it. But I tend to work out first thing in the morning, and I generally don't like fasting after my workouts.
Right. It's hard to disrupt your routine too, especially if you're going to the gym.
Yeah. The days I fast, are the days I don't work out in the morning. And then I'll wait to eat until lunch or something like that.
Right. Makes a lot of sense. Terrific. Well, we covered a lot of ground. Any concluding thoughts? Anything else you want to share on health and longevity, payments, the founder journey?
No, I mean, this was a lot of fun. I think we've got a lot in common on these topics, so it's fun, and I like that this is a bit of a different topic than I usually get to cover. We didn't just talk payments or just talk crypto. So yeah, I appreciate that.
Well, I think it's a common theme amongst founders. There's a large population of techno-optimist founders that have very similar values and interests. They want higher quality of life. They want to improve their ability to be more effective and learn and have deeper, more meaningful relationships. So this is something I just discovered in the last year or two, we've noticed that with Lumida clients, there's this high concentration of shared values and interests. So we want to invest more in community and events and topics like that to bring people that have those interests together.
Yeah, no, I agree. Among my founder friends, there's certainly a lot of alignment around these topics compared to other people.
Exactly. Well, thank you again, Alex. Really enjoyed it. Appreciate it. We'll continue to track your entrepreneurial success. Thanks for joining us on this last episode of Lumida Non-Consensus Investing. So if you just joined, you can listen to Alex Wilson, who's a serial founder, built and sold a business to Shift4 public markets company, and he is spinning out to launch Cyclops, which is a picks and shovels infrastructure play to enable other banks and payment processors, payment gateways to become more relevant in the payments category around stablecoins and close the gap with Stripe. But you can find this show on YouTube, on Spotify, wherever you listen to podcasts. Just look up Lumida Non-Consensus Investing. Thank you, Alex.
Thanks, Rob. Have a good one.
Have a good one. Take care.